Good morning. I think I don't think that the market's indecision could get any worse. Yesterday, we reviewed patterns that supported a bias to the upside. Depending on where you look, that's still the case. But the other thing we looked at yesterday was if some of these patterns failed, there would be a negative reaction. And we saw that as well to varying degrees, which we'll take a look at. So it's going to start with SPX today, which is still trading sideways. And premiums, if you choose to, and I think it could be dangerous because of the market's indecision, is at 47.25 and 48.35. Things are getting too close for comfort with this trading vehicle. I would suggest staying away from it for now. In the past, premiums have been so far away that it's been no-brainers. And when it's this tight and the potential risk to reward here is skewed so negatively to the downside, the choice is yours, but I would suggest staying away from it. Okay. So, and with SPX here, we have an indecisive, sideways price action, which is still bullish, after this momentum move up. It's just chopping sideways here. And yesterday we had this bottoming tail corrective bar, and prices moved up and they got rejected. They didn't move up that far, so really no big deal as far as this goes. Looking at the Qs, on the other hand, we talked about yesterday that if this failed, it could set up a measured move lower. That's still a possibility. We'll see how things are progressing today. They did hold the 50 MA here, which is subjective. Looking to the left over here, you can see this little shelf of support that it didn't get to, but we talked about in the green room yesterday, the fact that if you look at the futures, which we will in a moment, there was a shelf of support looking at the overnight data, which was right about here. So it just kind of tickled under it a little bit. We also had discussions about what was to the left here being irrelevant based on the concept of trading below and above this area here. And we've really got this void. So there is the potential for things to fall sharply as far as the Qs go, and NASDAQ and tech, if they don't hold here. So we had a lot of discussions yesterday in the green room about these patterns and what was going on. So one of the other things that we talked about was, all right, this does have the potential for this measured move. However, this holding here, if today was to hold this area and we get some sideways price action here, this could have been a downside shakeout. Some call it a flush. It does have the effect of removing potential overhead supply because of the shock here and the move down, meaning those that would have considered selling possibly here or on a further move up, some of them, maybe not all of them, some of them would have gotten stopped out yesterday with a move under this low, a significant move under that low. So we'll have to see if this plays out one way or the other. Another indecisive pattern for the moment. Right at the moment, well, they've poked down to 394.50, 394.50, gapping lower here. Let me clean up this. I can't even see through my drawings here. I guess it's retesting this area here just above yesterday's low. So it still could be part of a bottoming process, coming down here. I'm on the 15-minute chart now where this holds and starts to move back up again. It could, Tony, the wide range bar. It's a wide range bar, or what we call a range expansion bar. but it's a little bit, again, indecisive even on the day because it did come off of the low a decent amount. So I don't know. I don't know. We need more information. So if it had closed down here, there'd be little doubt, about the decisiveness and the wide range bar. Yeah, this is the 50 MA, right? Simple 50 MA. It's always green on my charts. So it did hold there, and there's nothing to the left. But we'll look at the futures, and you'll see, kind of right around here, there was a little shelf going sideways there, where futures traders use that as a reference point, 24-hour data, and the 50 MA being right there, probably more widely followed than the futures by institutions. Just a very widely followed moving average, 50 and a 200. So that as a reference point, and it bounced off of that. All right, so let's clean that up again. So we have to see, if this holds today or whether it breaks the low and we start seeing the 5-minute trending lower. Well, then the probability of a measured move lower increases dramatically. There's nothing here to stop it from going down. And if this starts going down with some momentum, it's hard to think that the S&Ps aren't going to follow. They'll show relative strength because they have. But nonetheless, when market participants see such weakness in the face of what was setting up as a pretty bullish scenario here to test at least some type of upside and make, potentially new all-time highs for tech, not happening, everybody starts getting apprehensive. That's the psychology of what's happening intraday, as well as shock patterns like this on a daily time frame. So again, comes back to the uncertainty that's going on here, or was just a consolidation of this power move up. So we're waiting for more information to develop here, to figure that all out. So let's look at the futures and just scroll over here, and you can see that little shelf, that we talked about in the green room and mentioned here. That was what was to the left, and down to that little pivot right there. You can see, and of course the 50 MA on the daily was there as well. So intraday reference points, a subjective moving average reference point was there, and today so far it's kind of hanging out down here, which for the moment is bearish. That's a power move to the downside. There's nothing to the left here, right? Well, there's a little shelf over here, but there's very little there. So we've got a monster 60-minute bar to the downside. And as we always do, when we see that, we say, okay, to maintain that, we want to see it in the lower half of that move, which it's doing. And it's created some support. It's created some resistance. This minor little trading range that's going on there, which we don't know which way it's going to break. This suggests it's going to break lower. Now we just see, because the supply and the demand here is getting tighter. We can call it the spring getting wound. We'll see which way it goes. The longer it stays down here, the greater the probability that it's going lower. It's not really a flag thing. It's still bearish for the moment. So when we talk about, flags, and so look, we have to, this is bearish, right? So from a bear flag point of view, when we just talk about the textbook technicals of it, this is not that. It's just going sideways, which, we could say it's a more bearish than a bear flag, because a bear flag here would have a higher pivot high. In other words, this is your flag pole, right? And a flag, a flag waves in the wind, right? So, it would be something like this, and those that utilize connecting dots and trend lines. Our analysis is done horizontally, but those that connect dots, they look at a flag as an upward sloping channel within this power move. And then they look for this to break the line, whereas our approach is to look at what's to the left and see if it actually breaks price support, not a subjective line that someone or anyone would draw on the charts. So this is the type of textbook flag of the pole and the flag waving against that powered move to the downside. Okay, so again, we'll see how this unfolds here. Maybe it's just going to be a choppy day, which often happens with a power, a wide range bar down. We often do get a narrow range bar, which sets up, this wouldn't be what we'd call a textbook 1, 2, 3, but just a 1, 2, and then continuation to the downside. This could shape up as that, where the idea behind a 1, 2, 3 pattern is a power move, in this case lower, an inside day, which consolidates. It has an inability to retrace significantly, which creates this potential launching pad to the downside, the number 2 bar, and then tomorrow, obviously, we see if it actually breaks. Let's just duplicate that, and we'll see how this looks tomorrow, one way or the other, within this little sideways trading range that's going on here. Trader McGraw is asking me about XOP, which I would say the move done higher. I wouldn't bet on that. Still strength this morning. Obviously, we've got a pivot high up here, which is where prices are at right now. So as far as a stall here, yeah, that makes a whole lot of common sense. If it's gone from here to here. So we had this strength yesterday in crude oil, which we look at every morning, which is still, showing strength and kind of working its way up to this pivot there. Crude oil, oil-related stocks, XOP is oil and gas, stalling in this area. Yeah, we would expect that to happen. And then we'll see how it deals with this resistance over there to the left. In addition, yesterday, one of the things that we talked about Monday was, these interest rates popping up, and now they're up at the top of the range, and this moving up. We talked about XLF, right? How that was going to support financial stocks, which moved up sharply yesterday. And while this moved up sharply, oil moved up sharply, SPX, right, the S&P 500, just kind of marked time. So there was plenty of weakness in other places that the S&Ps couldn't move up, even while financials and crude oil stocks were moving up very nicely. So this is up near close to the top of the range. So we've got the strength, the relative strength sectors and stocks at their what we would call a destination point, where momentum would slow down. And so with the strong stocks at a point where their momentum is going to slow, what's going to propel the markets any higher today? Well, stocks bringing up the rear, maybe. But we've got more information here to suggest more of a consolidate yesterday's weakness versus certain areas of yesterday's strength. It kind of leads me to thinking more of a choppy type of a day, right? Said, do you count pivot formations on a lower time frame to predict the move in a way? Well, if I'm trading the 5 and the 15, I have to utilize the information that's available on the 5 and the 15. And of course, I would look at what's happening on the daily chart as to the bigger picture. But of course, if I'm trading, you know, the 5 and the 15-minute time frames, I'm going to look at the arrangement of these pivots. And in this case, indecision, where I've got opposing high pivots and opposing low pivots close to each other, where the battle is just, going back and forth like crazy here. And the message here is stay the hell away. Let somebody else trading from a 30-second chart, do whatever they do to deal with this kind of price action. But this is what I call a frog in a blender pattern. And you're going to be the frog trying to trade this. So just stay away from it. Internals, I didn't need to open that up that big. You could see they're up here yesterday. They didn't move much yesterday. And what we talked about was they're close enough to be cautious. And obviously, that was good advice, to be cautious yesterday and not be too aggressive with what occurred as far as a bullish pattern there. Or this one, it didn't get very far and things whipped around. All right, other markets. S&Ps, you can see just chopping around. They poked up there. And if you can visualize this on a line chart, there's absolutely nothing happening. Right? Went up and it's just going sideways and just whipping back and forth. Pictures of indecision. Would you please put up SPY? Sure. It's going to tell us pretty much the same thing. Move this up now above yesterday's high. And now, while yesterday's low is a reference point, everything is so close together. While it could break yesterday's low, nothing of significance is going to happen unless it breaks Monday's low. And so there's a chop going on here. Could be a beach day. Sometimes we call it. If you play golf, I don't know. But, at the moment, it just doesn't seem like, from the market point of view, that there's much potential here for movement. Now, so you might say, well, if that's the case, Greg, well, what about that SPX credit spreads, calls and puts that are close together that you're saying, stay away from? Well, just because things look like they can't move doesn't mean they won't. And when things are this tight, I'd rather, the saying of missed money is better than lost money, 100%, because the reward to risk here is terrible when it's this close together. And let's continue because it's getting kind of long here. The Dow has just been amazing. We had an awesome trade, still open from a swing point of view in Caterpillar. What a monster move. Wow. Now that's a wide range bar. And so while things are likely to slow down here and consolidate, that is a tremendous move. And of course, oil stocks did well. So they propelled the Dow slightly higher. Bitcoin here is just chopping around. Just dancing saying chop means breakout soon. Well, it could mean breakdown soon as well. Right? It means it's indecisive. The trend being up suggests higher, but it could go obviously either way. So we'll see how it's going to unfold. We looked at crude oil. Silver came down hard, and now it's consolidating here. More indecision. Gold ended up coming down real hard here, and it's retraced back up. So that is strong to recover from that. And this is a great example of the MTS concept of wide range bars are the weakest link in the chart, even though they're power moves, because it creates this void and prices have recovered back up again. Yeah, exactly. Just dancing in YouTube. No trade is good position until a clear direction. Absolutely. Absolutely. All right. And VIX doing nothing here. Doesn't give us any information. Transports recovered from this bar. So, coronavirus, whatever new strain is coming, right? This is a positive in what's happening here, that airline stocks and the cruise lines held up well. And I guess I'd have to look at them rails, but this is a positive in the face of this pivot that's to the left here. So indecision, you know, charts that look like this, breakout, breakdown, see which way they go, stay on the sidelines with patterns like this until they start to make a move. Um, or the individual stocks that are moving, gap up, gap down, and so on. So there you have it. All right. Yep. Fed minutes coming. So to you, Dan.
Good morning. Yeah, we have Fed Day, Fed minutes rather. I don't call that Fed Day. And we talked yesterday about it, or about my position of it. And it's like, who cares? Something that's happened 2 months ago. We had so much more information, but that's what the market cares about. So yeah, you could expect some whipping around at 2 o'clock. And yeah, talking about being cautious, we didn't give one single new trade to our subscribers. We're kind of just managing a bunch of opens. We did give this one on a small pullback here in the morning, which we never got. But Greg and a couple folks in the green room got it, and I just wasn't quick to the draw to post it in time. All right, so our opens here, we still have the spider diamond call spread. We were playing defense on those yesterday. Glancing at the other opens here. Most things down a little bit. I'm not expecting a whole lot. Let's look at some gappers here. Roku disaster gap. 211. Yeah, why don't I have that in my, no, we stopped that at Roku. That's why it's not in my position minder. We stopped out of that. We have Daku. We have for January in the advisory letter. But now we're out of that one. That's why you scared me there from like, I don't see any disasters. We're in Chevron. Chevron, we got into. We got in, today's Wednesday, we got into this on Monday. Nailed the entry on this. We scanned a bunch of them. And in the green room, we went through them and it was unanimous. We all said, yep, this one is fantastic. So we entered this one on Monday. Sold a third, and we're still holding 2/3. Cream, we actually had a put spread that stopped out yesterday, and now that looks horrible. Horrible. This is a Dow component, so this is going to be a drag on that. I think it's a Dow component. Is it? I'm glancing over at my Dow 30. I'll check that later. But now this pattern's a descending triangle with a failed reversal at the 200. I don't know where it's going to go. Maybe I don't know. That looks bad. CCJ, I just saw this thing gapping up. Nice, kind of inverse head and shoulder looking thing. Head here, big move up. Closing breakout, price void. My target would have been around 26. It's a beautiful pre-market 15-minute chart. Gap up, sideways, consolidating the upper third of this. That's why I use this 15-minute chart in all my morning trades. So if I were to trade this as a gap trade, this is beautiful pre-market. And then you just put it in a 5-minute window and see how it sets up. within the first 30 minutes. Estee Lauder, I'm watching this for a call spread. You know, this was bullish as can be, daily, weekly, monthly, and now this is a shock pattern. Gapping under 1, 2, 3, 4, 5, 6, 7 bars. So that's a tier 1 candidate for call spread. But we've got to go through our checklist, see how it sets up, check the spreads. I already checked earnings, that part's okay. They don't have weeklies, so the only bad thing is we got to do a January if we do it. All right, Adobe. And Greg, you mentioned this as a call spread back in here, and it just didn't have any juice, but that fell nicely, and that's getting whacked. You know, it's not a great setup being down 5, 6 bars, but it's weak. Stands 305, gap into the 200 here, but bullish gap. We'll come back to you. Nikola, nice. This is a new low, bullish new low divergence over here. We actually traded it on this gap igniting day. We actually were long. And it's a deep retracement, but you know, it's holding, going sideways. Now it's gapping up. I'm putting that on a list, on a thumbnail. So that looks great. Maybe it's 30-minute high, maybe it's put spread, maybe both. Let's come back to that. I don't want to get into it now, but it made a new low and didn't go very far relative to prior lows. That's a quick answer. Sony here, I saw the news that they are going to get into the electronic car business, vehicle business. That's bullish, daily, weekly, monthly. Boeing here, I see cranking pre-market, and we were watching this yesterday. We were looking at it as a put spread, but it had no juice. But there's a void here. I think 220 is looks like a punt. And they were also on the news here. This Allegiant airline is going to buy $5 billion worth of planes from them. And we've been trading the airlines. We had a nice trade on Delta. Again, we'll come back to this, but you know, this is a fantastic bottoming pattern, folks. So that's going on my list. You know, we'll come back to it in the green room and talk about it in more detail, but that's a beautiful bottoming pattern, beautiful. So I also had Alaska and the airlines on my list, showing relative strength. This was bullish consolidation at resistance here, price point. So that still looks great. Let's see. YouTube's asking about Ford, Pelletier. Hey, Just Dancing is your screen name. Next time, just do me a favor and give me the symbol. As you know, I know what they are, but Chevron up alarm. No, Ford. No. He's saying Ford. No, we got into Ford on the gap breakout day on Monday. We're in trail mode now. No, you do not enter. Pelletier, you didn't tell me if you're long or short biased, but that is a very bearish consolidation in a downtrend. Microsoft, you didn't tell me what time frame or bullish bearish, so I have no idea what you're asking here. I mean, it's weak, it looks lower, but you know, what time frame are you trading? And then finally, you said Macy's. You know, it's up a lot at resistance and the market's iffy. Here, this Nikola I mentioned. Let's check $10 puts for now.